Options expiration this week. We had a big jump on the VIX gap higher coming up to the 200. The 50 is still above the 200. That's bad news for the stock market. Could mean a topping process is under construction right now, which I think is likely. Be further consolidation here, but if we start seeing a surge back above the 50, stay above that level here on the VIX, and again, it's possible. Close but no cigar on the S&P. My guess is you're going to reach the target levels I've talked about. I've said that over and over. I like to give you the alternative view in case I'm wrong about my target level being reached. We've had this divergence on the RSI and the stochastic here, and MACD turning back up. So we'll be watching to see what becomes of the VIX. Do we sell off with the Fed? See the triangle break down even, see the sell-off even more in the triangle breakdown on the S&P. Rebound. I think we're going to likely rebound and see a Santa Claus rally here. Lighter volume. We'll be watching to see how it unfolds. Oftentimes the VIX will bottom before the S&P tops. Keep that in mind. Now we're going to get the Fed meeting tomorrow. The Fed's expected to cut. Conventional wisdom, we're now going to have the Fed pause for a little while until the March meeting in 2025. I'm telling you, if the Fed did that, it would be a huge mistake. Be slashing rates, not doing this 25 basis point stuff. Be slashing rates right now. They're focusing on the inflation, not on the recession, as they did in 2001, as they did in 2008. Both times they had to come in and do jumbo cuts. I talked about this at great length and detail. Watch the video. Sunday, I'll link it at the end of this video. You have to see this video. Understand what's about to happen. The Fed's going to end up doing jumbo cuts when they should have been raising rates ahead of March of 2022 when inflation was starting to show up and rear its ugly head. The Fed kept telling us it was transitory. The Fed was very dovish when they should have been hawkish. Try to deal with the inflation that they ended up creating along with the government. They're responsible for it. Their policies led to it. They were extremely dovish when they should have been hawkish. Now the Fed is going, oh, there's no hurry to cut. Now they're extremely hawkish, wanting to keep rates higher, going, hey, we don't need to hurry up and cut, rather than being dovish. The complete opposite. The Fed was dovish when they should have been hawkish. Now they're hawkish when they should be dovish. They're slashing rates. We're going to get jumbo rate cuts from them, likely in the first quarter. They're making a huge monetary mistake. Now, you have other people out there who are even going further, telling us, oh, inflation's going to be soaring back up. The inflation's going to go higher. It did in 2007 and 8 there. Recession started, but eventually the deflationary forces will deal with it, and the recession will help resolve the inflation problem. It was higher than it is now back in 2007, and it resolved the issue. We had that hot PPI report, but right now the conventional wisdom is the Fed's going to pause in January. I think you're going to see the Fed panic in the first quarter, do jumbo rate cuts at some point. Did do a pause, it would be a huge monetary policy mistake. They're already making right now by not slashing rates dramatically. The Fed is blindsided. They're looking at inflation, which is a lagging indicator, and looking at everything else that is telling us recession is about to start, and the recession indicators, the Fed dismisses them. Absolutely incredible. I'm telling you, a recession is going to start in the first or second quarter, probably in the first quarter. Fed is probably going to or I should say I'm predicting that the Fed is going to do jumbo rate cuts in the first quarter. If the recession does show up by then, I think you got a good chance it's going to show up. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Take a moment to do that. I would really appreciate it. The link below to take you to a secured site. You can donate any amount you want. I thank you for your consideration for that. Watch the video all the way through. I'm going to be talking about the triangle. Is it a reversal pattern? Is it a continuation pattern? More about that shortly. Quickly, the Fed is supposed to cut tomorrow, 97% chance. Get a 25 basis point cut out of the Fed for December. Okay, the Fed is expected to pause after that. Then they're expecting another 25 basis points sometime between March and September, and then one more after that in October, and then another in December. The probability right here is not factoring in that we're moving into recession. Bird doesn't believe that. The experts don't believe that. The Fed doesn't believe that. The rude awakening is coming. believe the recession indicators. They are reliable. They are accurate. It dismisses them. Soft landing fairy tale that they keep promoting. I'm telling you, expected the Fed is going to pause in July. A huge mistake. They should be not doing this quarter point cut. They should be slashing rates right now because recession's about to show up. Probably going to show up in the first or second quarter. My guess is the first quarter. This is going to dramatically change, but right now, it's taking a hawkish tone. No rush to cut. We're in a good place. Ignoring the deterioration in the labor market. Ignoring the uninverting of the yield curves. Ignoring bomb rule and other recessionary indicators that are telling us we're about to move into recession. Try to talk more about them later this week. If you did not watch Sunday's video, I'll link it again at the end of this video. There's extremely important information in that video. No one expects that we're going to have a recession right now. I'll show you what has happened in the past and what we might expect in the near future. If you didn't get a chance to watch Sunday's video, I made 2 videos over the weekend, one on Friday, one on Sunday. I'll link it at the end of this video. An extremely important video. The first 10 minutes are the Nasdaq, and after that, important stuff. Go watch that video. Market down today. The Dow down 267 points. S&P down 0.39%. Dow was down, by the way, 0.61% to close just below 43,500. S&P down 0.39%, down 23.5 points. At the 6,050 area. That was our previous gap fill area. Nasdaq down 0.32%. The Russell down 1.18%. The Russell and the Dow are now testing their 50-period moving averages. We've seen a major sell-off with the Russell and with the Dow, while the S&P has corrected sideways and Nasdaq rose to new all-time highs. Ahead of the Fed meeting, the Dow has now had a major losing streak, the longest losing streak since 1978. I think that's suggesting we're going to get a rally with the Russell and with the Dow that have now become oversold, now testing their 50-period moving averages as we form that triangle on the S&P 500. The Dow has now had a 9-day losing streak. We're now getting the 10-period dropping back below the 20-period. But we come back to the 50-period moving average. We're just above this trend line. If we exclude the shadow, then we're right just directly above that trend line. But we're hitting the one in the weekly time frame. I talked about it yesterday. So again, I think this is suggesting we'll probably see a rally surrounding the Fed and on into the holidays. I think you got a pretty good shot. The stock market is going to peak in December or January, as I've talked about. S&P will reach that upper channel line weekly time frame, and I'll be watching. Does the Dow diverge with S&P? Does the Dow make a lower high? Remember, we just recently had the Dow and the transports diverge from one another at our peak there from December 4th. So Dow has been selling off as the Russell has been selling off, and again, giving back most of the rally that we've had just before the election. S&P has gone sideways, so I'll be watching. Do we get another divergence and the Dow comes up into the upper channel line here, or do we get a lower high on the Dow with the next, if we bounce here off of our 50-period moving average? I think that's likely. Again, after the Fed, as we go into next week, we're going to have very, very light volume. Again, it doesn't take much to manipulate the market up or down. Is either with the Fed or with the Fed and the holidays going to reach the upper channel line S&P 500. Big money will probably go away here and retail investors give us a Santa Claus rally. And then we'll probably see a big rug pull in January, but we might see the market peak in December. I think it's very, very possible we get a December or January peak, as I've talked about in every single video. Got to reach that target level. I think we will there in the weekly time frame. The Dow's hitting this trend line after that big losing streak. Again, we've been down for 3 weeks straight. We're hitting this trend line. If we can bounce there, then again, we can either go back up and hit this trend line one more time, maybe go slightly higher, or get a lower high and diverge with the S&P 500. That's certainly possible. Sometimes it plays out that way, as I've talked about how Nasdaq often will diverge with the S&P like it did back at the 2022 high for the S&P. It had already peaked back in November of 2021 with Bitcoin. Usually you get the assets that have the most volatility. Sometimes they can peak first. I think we've likely seen that with Nvidia. Now, I could be wrong on Nvidia if it goes back up and hits a trend line one more time. Long-term trend line in the weekly time frame that I've been talking about over and over several times a week. I talk about that chart. It certainly has the most volatility and down, but we've had MicroStrategy added to the Nasdaq 100, and that's kind of been helping the Nasdaq. And again, MicroStrategy has huge exposure to Bitcoin. Bitcoin peaks and MicroStrategy peaks. That's going to really, MicroStrategy will really be a big drag on the Nasdaq eventually, the next bear market. But look at this multiple point divergence. Again, is probably going to be, we're going to go up here and either get a lower high or another reference point of a divergence. You've got the divergence going on here with the price oscillator and the MACD, and it's just all over the place here on the Dow. The multiple point divergence is likely going to lead to a reversal, not just a pullback here. Again, it may not be done yet if we get a big rally over the next 2 or 3 weeks here with the Fed maybe, or dragging out into the holidays. Short trading weeks on light volume. What do we have? 3 more trading sessions this week, and then we've got 4 days next week, and then another 4 days after that. Again, market's going to close early. They're going to be abbreviated sessions. I think New Year's Eve and Christmas Eve. We've got about 11 sessions left, and then a couple more days onto that if you're including the weekend. So about 2.5 weeks, and then we're in the new year. So I talked about, again, the S&P market could drag into January for tax purposes. Now, it could top in December. It topped in December of 2018. It quickly dropped 20%. We could see the market run back up based on the sell-offs here with the Dow and the Russell to allow the S&P to reach the target level that I've been talking about. Just the Dow that's had this sell-off, 9-day losing streak. We've had a pretty good sell-off with the Russell. Both of them had the divergences here early December with the Dow. I think the Russell was the 25th of November. Again, I was just overthrown that long-term monthly trend line. We did the same thing at the 1929 high. But let me just show you something. This is the log scaling with the Dow right here. Channel here starting in 2022. Nice looking channel there on the Dow. Quickly, just to show you what's going on with the Dow, we went up to this trend line from 2018. The linear scaling here slightly overthrew that level. We have overthrown it, and then we've turned right back down, and we've dropped now over the last 9 trading sessions. Just the divergences that have led to the sell-offs first here in this 20%. I'm not sure what it is on the Dow, but it was 20% on the S&P. We had that divergence right there, then a larger triple divergence there in 2020, and then another divergence over here in 2022. Bullish divergence for the bottom in 2022, and now you've got this divergence right here. So kind of interesting there on the Dow, just to point out as we're talking about the sell-off with the Dow and the Russell. Now again, notice the Dow daily chart is testing that 50-period moving average, okay? And again, if we go a little bit lower, you've got that trend line there. We're hitting the trend line already, though, in the weekly time frame, that rising wedge, the lower boundary of the larger rising wedge. That goes just a little bit further back. Look at the Russell. Again, the Russell down almost 1.5%, just above that 50-period moving average. The Dow tagged it, moved just beyond it. Again, look at the diversions. We had one on the Dow. We had one on the Russell. We've had significant sell-offs with both. The Russell, divergence on the MACD as well. And if we can rebound off these 50-period moving averages, we've had significant sell-offs with both the Russell and the Dow. If we can rebound back up, I'll be watching. Stop making new highs, or does the Russell stop making new highs? Does it end up diverging, as sometimes it does with the S&P 500? That happened back at the 2022 top. And the Russell has already peaked here in November 25th, I believe was the date, late November there. Russell on December 4th, early December. Can the RSI move back above 50? Do we get a triple divergence or confirm a lower high? If we could try to rebound here, we'll be watching to see what happens. Do we go a little bit lower and hit the 50 or move beyond it and then try to rebound? So some things to be paying attention to. We do have a little trend line here. If we connect this level, and this level, just a little bit underneath that 50 period moving average. So just something worth paying attention to with the Russell. Possible though that the Russell has peaked, does attempt to rebound, that it might set up a lower high. We'll be watching to see what happens. It might, because sometimes it diverges with the S&P, other times it doesn't, but often it does. Back at the 2022 top for the S&P, you had both the Russell and the Nasdaq both diverged with the S&P 500. They had both peaked in late 2021. Keep that in mind. Also had the Russell hit the upper boundary of its channel, and I'm taking the time to show this to you because we've had this significant sell-off with the Russell and the S&P as with the Russell and the Dow as the S&P is corrected sideways. So again, could the S&P break out of the triangle and we get a rebound with the Russell and the Dow? Both the Dow and the Russell moved off their upper boundary channel lines. The S&P hasn't reached it yet. You see back over here the 2021 top with the Russell. The Russell had peaked already, sold off sharply, and then the S&P peaked later. The S&P tries to peak over the next few weeks here, December or January. I'll be watching to see if a divergence develops. Again, if we start going lower with the Russell, the S&P still might make new highs. It peaked over here in November, and in January of 2022, the Russell made that lower high and the S&P made the higher high. Just things worth paying attention to. The S&P hasn't reached that upper boundary here in the weekly time frame. It's going sideways over the last couple of weeks. When we sold off with the Dow and the Russell, the S&P went sideways. I think we're going to go up and we're going to end up hitting the upper channel line here in the weekly time frame. And again, maybe we're this trend line right here from the peaks earlier in 2024 and this trend line here going back parallel boundary to the lower boundary where they intersect maybe here before December ends or on into January. Remember when we got the peak in 2022 after the Nasdaq had peaked and the Russell and Bitcoin, S&P went slightly higher than the previous peak, and it peaked out, forming the divergence, completing the divergence. Here we have a multiple point divergence. Peaked out that first week in January. After that, the big money unloaded, waiting to get into the new year for tax purposes, but we already saw the peak at that time with the Russell, with the Nasdaq, and with Bitcoin. So keep that in mind. Again, those often diverge with the S&P 500. Look at that beautiful divergence down there on the MACD as well. All over the place on the S&P 500. Well, the Russell has sold off in the daily time frame with a decline since November with that topping tail, and the Dow has sold off. The Dow has sold off. 9-day losing streak. The Russell has sold off. They're back at their 50 periods. The S&P 500 has gone sideways to form this triangle. I told you over the weekend that I thought this triangle would set up actually be a continuation pattern to the upside. Now triangles, listen to me carefully. We've had this triangle set up, and I told you again, I thought we'd have an upward resolution, but we could end up still getting a downward resolution. If we do, you got horizontal support directly below. You've got the 200 period. Now, again, over here, I told you we were going to have a sell-off, and I told you when we had this triangle set up, I thought we'd likely get an upward resolution with it, and triangles can break either way. We ended up getting a downward resolution. Then got the bullish divergence ahead of the election, and the rally I was looking for over here happened over here. So again, I'll be watching. I still think we're going to reach the upper channel line on the S&P weekly no matter what, and likely that upper boundary of the rising wedge on the daily that I've been talking about. So I'm watching this consolidation. We're going sideways on the S&P as the Dow and the Russell have sold off, and the Nasdaq rose to new highs. Today we got a bearish inside day on the Nasdaq, so we'll be watching that, watching what the Fed has to say and how the market responds. Now, if we break down and move towards the 200 period moving average, we have this rising trend line, the lower boundary of our rising wedge as well. I think we're still going to make it to the upper boundary right here, and if we do, get an upward resolution to the triangle with the Fed or surrounding the holidays, or we go down a little bit more and then go back up, I think that reaching this trend line right here will allow us to reach the trend line in the weekly time frame that I've been talking about on the S&P 500. We've been going sideways here in December. A continuation triangle in here on the S&P 500 as we pull back on the Dow and the Russell. Told you we turned off of this trend line from the July high. I think we'll end up clearing that trend line and moving to this trend line up here. I warned you about the pullback correction with this divergence right here, but told you again we haven't reached my objective target. I still think we're going to make new all-time highs. We've corrected sideways here on the S&P 500. So I'll be watching to see if we get an upward resolution here on the triangle. But we do have, if we do have an upward resolution or break down and go towards the 200, towards the trend line, and then get a break to new highs, trend line in the daily time frame. So we can see the RSI form a divergence. If we go up to this upper boundary, again, we're turning down off the peak from the July high right here. Talked about that, and that formed the divergence there on the 60-minute chart that's given us a sideways correction. The cloud is acting as support. The 20 period, we're holding above that. This horizontal support level you see right here, the dotted black line. If we get an upward resolution, I'll be watching to see if we can clear the red trend line. If we do, I think we're headed towards this trend line right here and that upper boundary in the weekly time frame. If we head down and get a downward resolution of the triangle, then watch the trend line, the rising trend line, and that 200 period on the 60-minute chart. Another divergence form here on the MACD. This one has given us a sideways move, as we saw in the 60-minute chart. If we look at momentum, again, it moved to a new peak. It's turned down here. I think we have something very similar to what we had over here and over here, where we're forming this divergence where price goes sideways and then it goes higher and you get the divergence. Here, right here, we went sideways and then price went higher and you get the divergence. I think we're going to see the same thing here where we're going sideways, but then I think we're going to end up going higher and reaching the objective target, the trend line right here, and the target level there in the weekly time frame. Now, we could do that immediately, or we could take our time doing it. And again, the further right you go to the chart, the higher the trend line goes. And again, now that could come in at the high 6100 area or on into the low 6200 area. The trend line is the target, not some number. The longer we take to reach it, the higher the target will go. The trend line is rising. My signals so far have shown a sideways corrective move, which again could take us up to that upper boundary here. So the upper boundary here, the upper boundary you just saw of the rising wedge on the daily chart, and then one more trend line. Then we have this trend line in the daily time frame from the 2023 low, and again, we bounced off of it here and rebounded, and then it acted as support. We broke it, and then it's now acted as resistance over and over and over again. Came just shy of it right there. The recent December peak, we've gone sideways. So again, I think we're likely going to push on up into that trend line, and again, that could take us into that high 6100 area, maybe on into the low 6200 area as we've taken our time to reach these trend lines. These are the three. This one right here, channel line on the weekly chart, the upper boundary of the rising wedge in the daily time frame. I think, and all those levels are coming in at that same area. That's why I think the S&P is likely headed, maybe with the Fed, maybe surrounding the holidays. We'll have to watch and see. But again, could see a Santa Claus rally here, allow us to reach the objective target levels here in the daily and the weekly time frame. I pointed out to you before we had the red oscillator bars show up that we were getting that divergence. Intraday, I told you we might see red oscillator bars show up and end up forming a divergence on the oscillator, on the RSI momentum. And again, I still think that's likely the case. I'm going to be looking for green oscillator bars going into the future. Triangle breaks to the downside. Again, we may get more red bars, but I still think we're going to move to new all-time highs. Even with the sell-off that we've had with the Dow and the Russell, S&P's gone sideways. We haven't had a bearish reversal of conditions. We've seen the momentum line turn bearish, but we've gone sideways here, and the cloud has remained bullish. We've held above the 20-period moving average. I think you're going to end up seeing green bars and form a divergence here. That's with the Fed. Maybe it's on into the holidays. We'll be watching, but I think we'll reach the objective target levels. Start seeing a major reversal and all my signals begin to turn back to bearish. We see those divergences play out in the weekly time frame immediately. My guess is you're going to still try to go higher. The oscillator turned back to green and it's moving to new highs on Nasdaq. So again, Will the S&P and Nasdaq end up diverging? We got a bearish inside day. The last one we got, nothing amounted to it. Candlesticks have to be confirmed. You can get bearish or bullish candlesticks all day. They mean nothing unless they get confirmation and a follow through. Get an inside day. I wanted to warn you about that. Possible Nasdaq peaks before the S&P 500. It's moving to new highs as of yesterday. The S&P is not. The Dow and the Russell have had a sharp sell-off. Nvidia, though, could still rebound back up, testing the major trend line, trying to breach it in the weekly time frame. Now, if MicroStrategy now has an influence over the Nasdaq 100, Nvidia does. Again, MicroStrategy has all that exposure to Bitcoin. Fed meeting, we get the Nvidia chart. It's breaking to a new low. It's trying to break that trend line in the weekly time frame, but it got a bullish hollow red candlestick, a candle of indecision. Now again, we have the head and shoulders. This candlestick can be a continuation or a reversal. It can go back up. We could still end up better defining this right shoulder, or even try to fill the gap on a closing basis. I believe that Nvidia has likely peaked. Wrong about that. It will go up and it will hit the upper channel line in the weekly time frame, the long-term channel once again. Lower candlestick just under the support level. Remember, I told you ahead of earnings, I thought we were going to hit that trend line. We did. We turned off of it. We dropped 14%. We hit these trend lines. I told you I thought we were going to bounce and get a right shoulder. We did. Got it right. Here, I told you again, break that trend line in the weekly time frame, then all bets are off. We're done. But if we could bounce, we could still again, get further consolidation here. Hollow red candlestick often is bullish, closing just under that support level, that trend line, but breaking the blue one and then back testing that at the moving averages. So again, is this pattern done or not? Divergence tipped us off to the sell-off going into earnings before we reach that all-time high right there. And I've been warning you about this trend line right here. We're trying to breach it ever so slightly right now from these lows back over here, the channel line. If this breaks decisively, we take out the 20-week moving average. That's going to be extremely bearish for the market. Nvidia might do that ahead of the market peaking. That's certainly possible. And if I'm wrong about the head and shoulders, if we go make a new high, then this trend line is going to be tested again, and we go up here and we get one more test and then we break it, or a bounce and we break it if we don't do it immediately. So I'll be watching Nvidia closely. We've got this divergence, triple negative divergence on the RSI. The MACD's got the divergence pointing straight down. So again, do we get this decisive break here this week with the Fed or on into the holidays? We buy a little bit more time with Nvidia. We'll be watching. Channel you just saw is this on the weekly chart is this channel in the larger channel here, also in the weekly time frame. I told you ahead of earnings that we had turned off of this trend line in June at the June peak, and Nasdaq and Nvidia diverged from one another. Now Nvidia has gone up ahead of earnings. I told you we would likely reach this trend line again and turn off of it. We were already pushing up slightly above the June peak already. Trend line breaks, it will confirm a reversal off of this upper channel line and terminate the bull market in all likelihood for Nvidia, for the AI stocks, and for the semiconductors in the stock market. If we rally, we might reach this trend line one more time, and again, another reference point of divergence. But again, I believe that this is the area where we're going to see this peak form on Nvidia, which has been leading the Nasdaq, and that's why we talk about Nvidia. Nasdaq was down 0.43% today. Nasdaq 100 down 95.5 points. We've had the overthrow to the upper boundary, the rising wedge. I told you that's very common. Get an inside day. We'll be watching to see what becomes of that. On the daily chart, we'll be watching to see if the rally can continue with the Fed or with the holidays or both. We did get a bearish inside day in the form of a doji. We have a 2-day bearish Harami doji pattern, and that's where you get the doji being the second bar. We had a bearish inside day over here, but as I've said, candlesticks have to be confirmed. They mean nothing unless they get confirmation. And you got to get a follow through. Doji, a candle of indecision. 3 sessions ago. It was a continuation doji. Again, Nasdaq being helped out by MicroStrategy. Seen this sell-off on Nvidia. 2 other names have helped Nasdaq. So what becomes of this bearish inside day? And again, will we see the Nasdaq peak ahead of the S&P 500? S&P is going sideways. The Dow and the Russell are selling off. We've seen a rally with the Nasdaq. Watching, do we start seeing the Nasdaq diverge with S&P as times does? It did at the July peak, at the 2022 top for the S&P 500. Doesn't have to do it, but it could. Something to pay attention to the inside day in the form of a doji that we got today. And the doji could be a continuation or a reversal pattern coupled here with that strong day we had yesterday. You do have a bearish harami candles pattern. Here it is on the daily chart, zooming out again. We've overthrown this trend line right here. We've got that inside day. Do we throw back into the trading range of the rising wedge? And oftentimes you do get rising wedges where you get an overthrow. It's very, very common. We have a divergence that's formed right here with RSI almost getting these 2 equal peaks where price has gone higher. MACD is moving higher though. And again, like continues, the RSI just might move to a new extreme. We'll be watching what becomes of this pattern and the doji, and is it confirmed? Does it get a follow through or not? We drop back below the upper boundary of the rising wedge. S&P is turned off of the July peak. The Nasdaq already got above it. It acted as support. 60-minute chart had this divergence, gave us a pullback to the 50. We've gapped higher. CPI pulled back with the PPI. Another gap higher, pullback, and then again another gap. So we've had a series of gaps. Here we get a gap lower, hitting that bearish inside day in the daily time frame. You have a series of multiple point divergences that are developing here. May not be done yet. We'll be watching what becomes of today's doji. Is it a continuation up, or is it a reversal to the downside with the bearish harami? Again, the candle pattern has to be confirmed. Show you the trend lines I'm watching. If we do go higher, I'm watching this trend line still. This is our linear scaling, and if I exclude the lows over here and I just connect this low here and this low here, you got a really nice looking channel. We're directly below it here with the linear scaling. You do have these divergences that are under construction on the RSI and the MACD. So we're just below that level right here. Now here's that trend line, and again, we've overthrown the upper boundary from the parallel boundary from the pandemic low over here to the 2022 low and that 2021 high. We've overthrown that level, and we have this other trend line we're watching that we're directly underneath. If we look at the log scaling, by the way, this trend line is not perfectly parallel to the lower boundary unless we exclude the lows over here. This trend line connected to this trend line, this low to this low, that's where we bounced off of, not perfectly parallel. The blue line is not perfectly parallel to this trend line unless we exclude that low right there and connect the point here and here, as I showed you on the other chart. Now, if we look at the log scaling, and again, just some levels I'm looking at, the log scaling, a potential larger rising wedge. This could take us just a little bit higher. The log scaling connecting this peak here to this peak here. And again, that would just take us a little bit higher if that were the case. And again, a potential rising wedge here with our log scaling. Some people look at the log, some people look at the linear. I look at both. I find both helpful. But those trend lines are a little bit different on the log and linear scaling, so I wanted to show you them both. Trend lines I'm paying attention to on the Nasdaq. Now, monthly trend line we're reaching there, and same with the S&P monthly. Time to show you the monthly charts today. I show you them constantly. Again, we're testing those trend lines. Some trend lines I'm paying attention to.